Hello friends. Friends, we will continue with cash flow statement. Right? And in cash flow statement, we have been discussing about cash flow from investing activities. We have done cash flow from operating activities, and now we have been doing cash flow from investing activities. Clear? Now, as we have discussed, cash flow from investing activity means it involves two things: the purchase and sale of fixed assets and long-term investments. Right? It involves purchase and sale of fixed asset and long-term investments. The other thing it involves is the loan and advances given. Clear? Similarly, if we say the sale and purchase of long-term investments, then the income earned from these investments will also be considered while calculating cash flow from investing activities. Right? And in the last lecture, we discussed about preparing fixed asset account. Why we prepare fixed asset account? To ascertain the missing value, which in most of the cases will be the purchase of fixed assets. Right? Then I also told you that if you see the accumulated depreciation or provision for depreciation account, then you have to prepare two accounts. The one is fixed asset account and the second one is accumulated depreciation account. Clear, friends? So now in this lecture, we'll do some practical problems on this. Let's see. It says, from the following information, calculate cash flow from investing activities. We are given the opening and closing balances of machinery at cost, accumulated depreciation and patents. Additional information given is, during the year, a machine costing 40,000 with its accumulated depreciation of 24,000 was sold for 20,000. The cost of the machinery was 40,000. The accumulated depreciation on it over the years was 24,000 and it was sold for 20,000. Now, can you tell me the profit on sale? He says the cost of machinery. What is the cost of machinery given? It is 40,000. What is accumulated depreciation? That is depreciation that has been accumulated over the years. So what is the book value? Book value is 16,000. And we are given the sale value that this machinery is sold for 20,000. That means there is a profit of 4,000 on this machinery. Clear? This is how you will calculate profit. He says, during the year, a machine costing 40,000 with its accumulated depreciation of 24,000 was sold for 20,000. Now, as you know, that if accumulated depreciation account is appearing in the books, you have to prepare two accounts. One is machinery account and the second one is accumulated depreciation account. So first we will prepare machinery account, fixed asset account, right? So I will prepare machinery account. So we'll have the balance brought down of machinery. What is the balance brought down? The opening balance of machinery is 4 lakh and the closing balance is 4 lakh 20,000. So opening balance is 4 lakh and closing balance we are given is 4,20,000. Now we have sold a machinery for rupees 20,000. So I can say by bank, that is sale. This is for 20,000, and we have calculated that there is a profit of 4,000 on this. So we'll record profit to gain 4,000, and we are given the accumulated depreciation of 24,000. Clear? Anything else? This is all regarding machinery account. So we can calculate the balancing figure as purchase. Right? This is 60,000. This is the balancing figure. Clear? So why we prepare fixed account? To find out the missing figure, which in most of the cases will be the purchase of a fixed asset. Right? Credit side is more than debit side, then it is a purchase of fixed asset. Now along with this we have to prepare accumulated depreciation account. We have to prepare accumulated depreciation account. Right? So we'll have by balance brought down. What are the balances given for accumulated depreciation? Opening balance is 1 lakh and closing balance is 1,10,000. Clear? 1 lakh and closing balance is 1,10,000. Now we have accumulated depreciation in the machinery account because the depreciation has been charged to accumulated depreciation account. To machinery account 24,000. What is the balancing figure of accumulated depreciation account? What does the balancing figure of accumulated depreciation account shows? This shows the depreciation charged during the year. Clear? So how much it is? 34,000. Clear? So 1,34,000. So can you tell me what are the relevant figures if we talk of cash flow from investing activities? What are the relevant figures from these two accounts? One is this purchase. One is this sale. Anything to do with gain or accumulated depreciation? No. From accumulated depreciation, do we have anything that is related to cash flow from investing activities? No, nothing. Right? So this is how you will be preparing the fixed asset account, and if you have accumulated depreciation given in the question, then you have to prepare accumulated depreciation account also. Right? Then we have some more information regarding the patents. Patents are also our fixed assets, right? So we are given that patents were written off to the extent of 40,000 and some patents were sold at a profit of 20,000. What we are given is, he says that the patents are written off to the extent of 40,000. First of all, let's start preparing the patents account. We have the opening balances 2,80,000 and the closing balance is 1,60,000. So let's prepare the patent account first. So we have patent account, right? We have opening balance to balance brought down. What is the opening balance? 2,80,000 and closing balance is 1,60,000. So the opening balance is 2,80,000 and the closing balance is 1,60,000. Clear? Now, what is the information given to us? That patents were written off to the extent of 40,000. If they are written off, we can say by amortization. This is basically, in case of fixed assets like plant and machinery, we say it is depreciation, and in case of patents, we say we replace the name depreciation with amortization. Clear? So 40,000. What else is the information given? We are given that we have sold some patents at a profit of 20,000. We are given the profit, but we are not given the sale value. Right? Let's see how we do it. So we can say to gain. What is the gain? 20,000. Now you can see this debit side is more than credit side. Earlier I told you that in most of the cases credit side will be more, and if credit side is more, what we do is we say it is a purchase of an asset. Now it is the debit side that is more than the credit side. So what is the balancing figure? Balancing figure reflects the sale of patents. He has given in the question that we have sold some patents at a profit of 20,000, but we are not given the sale value. That sale value is our balancing figure. That sale value comes to 1 lakh. Clear? So you have to act smartly when you are preparing the accounts. Understand the language of question, right? Now if we talk of cash flow from investing activities, if we say cash flow from investing activities, right? If we see the machinery account, I told you that there are two items to be considered. One is the purchase and one is the sale. So we can write this down. We can say sale of machinery, right? Sale of machinery is for 20,000. Clear? Purchase of machinery, what is the purchase of machinery? 60,000, right? Then we have patents. For the patents, this figure is the relevant figure because we have nothing to do with gain, we have nothing to do with amortization. This gain and amortization we will take while calculating operating activities. Here the relevant figure is the sale of patents for 1 lakh rupees. Sale of patents for 1 lakh. So what is the net cash flow? Net cash flow from investing activities. So the net cash flow is 60,000 positive. Clear, friends? So this is how we prepare the fixed asset account, right? And if you have accumulated depreciation given in the question, then you have to prepare accumulated depreciation account also. Clear? So this was simple. Clear, friends? So let's do the next problem, right? From the following information, calculate cash flow from investing activities of X Limited. We are given the opening balances as at 31st March 2015 and the closing balances as at 31st March 2016. Investments at the rate of 10% and fixed assets, right? Now the additional information is that half of the investments held in the beginning of the year was sold at 10% profit. He says whatever investments we were having in the beginning of the year, that is the opening balance of investments, half of those investments we sold at a profit of 10%. Clear? Then he says depreciation on fixed asset was 1 lakh for the year. Interest received on investment is 35,000. Dividend received is 25,000. This is a very simple question. The only thing you need to understand is how to prepare the investment account. We have to calculate the sale of investment, sale value from the information, right? So first of all, talking of investments, right? What is given as opening balance? Opening balance of investments is 2,50,000. Then what is the investments sold? Investment sold is half of 2,50,000. How much? 1,25,000. What is the profit? What is the profit given? Profit given is 10% of 1,25,000. Clear? This comes to 12,500. So what is the sale value of investments? What is the sale value of investments? The sale value comes to 1,37,500. Clear? So we are given the profit on investments, we are given the investment sold, and we can find out what is the sale value of investments, right? Now we can prepare investment account. Now we have to prepare investment account, right? To balance brought down, and by balance carried down. What is the opening balance of investments? It is 2,50,000 and the closing balance is 5 lakh. So to balance carried down is 2,50,000. Sorry, it is 5 lakh. Okay. 2,50,000 is the opening balance. Opening balance is 2,50,000 and closing balance is 5 lakh. Now we have the sale value of investments. Investments were sold at 1,37,500. Clear? So by bank sale, this is 1,37,500. We are also given the gain. To gain 12,500. Now which side is more, debit side or the credit side? Sorry, this is 5 lakh. Okay. Now the credit side is more than the debit side, so the balance we get on debit side reflects the purchase of fixed asset. This is the balancing figure. Clear? This comes to 3,75,000. Clear, friends? So this is our investment account, and we have the other account, that is the fixed asset account, and regarding that we are given that depreciation on fixed asset is 1 lakh for the year and the opening balance is 8,75,000. Closing balance is 11,90,000. So we can prepare fixed asset account also. Right? So we are given to balance brought down, it is 8,75,000, and by balance carried down it is 11,90,000. We are given the depreciation. By depreciation we are given as 1 lakh. Anything else related to the sale? No. Nothing is given related to the sale of fixed asset. So whatever the balancing figure, credit side is more than debit side, the balancing figure on debit side will reflect the purchase of fixed asset. To bank, purchase, right? This is the balancing figure. Clear? This comes to 4,15,000. Clear? This comes to 12,90,000 and 12,90,000. Right? So when we talk of cash flow, if we talk of cash flow from investing activities, what all will be included? First, let's see the investment account. What are the figures relevant from investing point of view? The sale is relevant and this purchase is relevant, right? Sale is for 1,37,500 and the purchase is for 3,75,000. So I will write sale of investments. Sale of investments is for 1,37,500. Then purchase of investment is for 3,75,000. Now talking of fixed asset, for the fixed asset we have this purchase of 4,15,000. Purchase of fixed asset, it is 4,15,000. We have some more information in the question which is given as interest received on investments and dividend received on investments. I told you that investments we are considering as investing activity, so any income on these investments will also be considered while calculating cash flow from investing activities. So interest received and dividend received, right? So I will say interest received is 35,000 and dividend received is 25,000. So what we get is the net cash flow from investing activities, right? This net cash flow comes to 5,92,500. Clear, friends? So just be careful while doing questions. In this question, what was important was the calculation of sale value of investments. We were given the information regarding the investment sold and the profit. So from there we calculate sale value of investments. Then we prepare investment account and the fixed asset account, right? So this was the information that was relevant. Clear? So let's do one more practical problem on this, right? Let's do one more practical problem. From the following balance sheets of G and S Limited for the years ended 31st March 2016 and 31st March 2015 and the additional information, calculate cash flow from investing activities, right? We have the shareholders fund, share capital, reserves and surplus. Current liabilities we are given. And then on the asset side we are given is non-current assets, fixed assets, that is tangible assets. Then non-current investments. This non-current investment means we are given the long-term investments. Clear? Current assets we are given. Then we are given notes to accounts. Fixed assets comprises of two things. One is plant and machinery. The second one is land and building. They are given net value. Net value means after deducting the depreciation. Clear? Then we have trade receivables, sundry debtors, bills receivable. Nothing to do in investing activities. We have the additional information that during the year the company sold machinery at book value for rupees 2 lakhs. So we are given the plant and machinery opening and closing balance, and we are given the information that they are sold, some part of the machinery is sold. During the year the company sold machinery at book value for rupees 2 lakhs. The machinery is being sold at book value. That means there is no profit, no loss. Clear? So let's start by preparing the machinery account. We can simply prepare that. Easy. So we will prepare machinery account. Right? So we are given the opening balance to balance, brought down. This is 6 lakhs, and we are also given the closing balance to balance, carried down. This is 8 lakhs. We are given that we have sold machinery at book value 2 lakhs. So I can say by bank sale 2 lakh. What is the balancing figure? Credit side is more than the debit side. So the balancing figure that we get is purchase to bank purchase. This comes to 4 lakhs. So 4 lakh is the purchase of machinery. 2 lakh is the sale of machinery. Right, so what are the relevant figures from the point of view of investing activities? These two. So while preparing, if we prepare cash flow from investing activities, right, one is the sale of machinery. Sale of machinery is for 2 lakh, and we have purchase of machinery, that is 4 lakhs. Clear? Anything else regarding the investing activities? See the question carefully. Share capital reserves and surplus? No. Current liabilities, operating activities. On the asset side, we have the non-current asset, fixed assets we have dealt with because we were given the information regarding plant and machinery. Land and building, opening balance was 7 lakh, closing balance is 7 lakh. Clear? Non-current investments. Opening balance of non-current investments, that means these are the long-term investments. Opening balance was 50,000 and closing balance is 1 lakh. So that means during the year we have purchased the non-current investments of 50,000, which is an investing activity. Fixed assets plus long-term investments. Non-current investment means the long-term investments. Right? So we can say purchase of investments, that is 50,000 cash outflow. Anything else? Current assets not to be taken, fixed assets dealt with, trade receivables, operating activities. So that's all we have for investing activity. The balance what we get is net cash flow. Net cash flow from investing activities. This comes to 2,50,000 negative. Clear, friends? So with this we complete investing activities. This is very simple. Just you have to consider two things. One is the fixed asset and investments. Sale and purchase. Any income on investments. Right? any loans and advances given and their repayment. So you just have to remember just few things. Clear? Just remember one thing, that you have some extra money, you want to invest and earn income. Clear? So if you have any queries regarding any topic, just send me an email at ksjteaching@gmail.com. Right? And in the next lecture, we'll start with financing activities. Clear? We'll start with financing activities. So that's all for this lecture, friends. Thank you so much.